Hey, hi everyone. Welcome to Primary Market Chatter brought to you by Sunday Investing. This is our May 3rd week IPOs. This should be a quick edition. We are only covering three SMEs, and we'll kind of talk about our review of these three SMEs. And we're not planning to do a space this time because there were no main board IPOs, but then we had read all three companies and there were some people who had requested for it. So we were like, why not? In terms of, before we actually get started, just want to highlight some of the standard agenda items that I always do when we are not SEBI registered. None of what we say is qualified opinion. We are often wrong. So please feel free to discount everything that we say and do what you feel like. We just try to provide an unbiased opinion of what we understand from the company, but we can be wrong and we have been wrong in the past. Second, if you haven't followed our YouTube channel, I will post the link in the pinned comments. वहाँ पे आपको पंजाबी अंगीठी का भी promoter interview मिल जाएगा and Teamtech Formworks का भी promoter interview मिल जाएगा. So you can kind of listen to the promoter as well and kind of form your own view. So that's about the standard disclaimers. Starting the show, we'll probably start with Teamtech Formworks, setting up the company. Teamtech Formworks operates on a B2B model, manufacturing, refurbishing and renting modular T formworks and customized formwork systems for the construction industry. तो कंस्ट्रक्शन इंडस्ट्री में जब शंटिंग होती है तो उसमें ये न्यू टेक्नोलॉजी से जो फॉर्मवर्क्स लगाते हैं कंपनी वो रेंट करती है और मैन्युफैक्चर करती है. Interesting company in terms of the IPO. It's a 50 crore IPO, so decent size IPO for a SME board. It's coming at a market cap of 189 crores. FY26 financials की बात करूं तो this is the first company which has given full FY26 financials. It helps because then you don't need to guess कि numbers कितने आएंगे. It's coming at 54 crores top line and 11.5 crores bottom line. So उस हिसाब से this is coming at like 16 times. In terms of the LM is GetFi Capital Advisors. So with that, over to you, Rohit, to talk about Teamtech.
Thanks, Manish. So I'll just explain a little bit from the top of my head. I've not written notes, but as Manish said, we have interviewed, like we've spoken to this company in reasonable detail, as well as on a one-on-one basis, and then we've also done an interview with the management, which is up on our channel. So you can get a sense of, the promoter also apart from the business. So I'll just quickly tell you those 2-3 salient points that I liked about this business. So what they do is they make formwork. Formwork is this, you can think of it as today when you go and look at say some concreting that is happening, some kind of infra concreting that's happening. Generally, you will see some of these wooden structures with like these steel sort of things, steel bar kind of things, which are used to fill which is meant to hold the liquid concrete before it sets, and provided that shape in which it has to set. Formwork is a more organized form of that. So in a lot of the developed world, and as India also organizes more and more, you replace this lakdi ka structure with something that's manufactured to spec. Now the core of formwork is mostly modular parts that can be reused in multiple places. But of course, as you get into slightly more complex structures, let's say a bridge underpass or, certain curved structure and stuff, you can make your formwork specifically for the shape that the concrete needs to take. And this, of course, becomes something that is very, very sturdy. It is reusable. It can be used by the same person, across the span of that bridge. So you can sort of reuse it over and over. And it, of course, just makes everything perfectly uniform. So when you look at a structure that just looks perfectly perfect in terms of proportion, and it doesn't have these uneven bumps and stuff, that is generally a result of, high quality formwork. So that is what these guys do. These guys are a manufacturer of this. The promoter used to work for one of the companies that did this before he started this company. In India, there are either you have somebody like a Teamtech, and there aren't many Indian players like him, or you have these MNCs that have their Indian operations. So there'll be typically European companies that have Indian operations and cater to this market. There aren't a lot of homegrown players. As per Teamtech, they are the largest homegrown player in this space, and they're also pretty small, right? It's 50-60 crore. This is a straight infrastructure proxy. So if you like the infra space in India, this is a very good play to, play and organize it like a sector that is going from unorganized to organized within the infra space. Now this guy does 3 things. He sells the formwork, the core formwork is manufactured and you sell, for example. He rents the Formwork out, which is again an interesting model where there'll be a lot of people who cannot afford to buy the Formwork entirely, or they don't have as much use for it. Some of the small construction, maybe some small buildings that are being made. You can rent it, and once you're done, you give it back. And the third thing that he does is he also takes the Formwork that is used, refurbishes it. It need not be his own Formwork. It could be, some of his competitors' Formwork as well. You refurbish it. This is all made of steel at the end of the day. So apart from the coating and outer stuff, you can actually refurb and reuse it and resell it, or rent it out. So these are the three things that he does. Today he has, 10,000, I'm forgetting the number, I think 3.6 lakh, square meter, or 36,000 square meters of Formwork he can make today. He's raising money, and sort of basically setting up large capex where he will, I think, triple the capacity with the current capex that is already underway, which will go live in October. And then he's doing another capex that will further triple that, over FY28, FY29. So today he's mostly constrained just by space. He's like almost fully utilized. From a practical perspective, he's nearly fully utilized. Today, the business, I think it does about 50, if I come to the numbers, it does about 55 crore of revenue. I think it grew about 60 odd % last year. The most interesting thing is the margins are very high. And this, as per the promoter, is a structural thing because all his competition is from people who are MNCs that largely do a lot of import of the products that are being sold here. There aren't people who have really indigenized this product. And because his quality is so good, he competes with them and not with the local fly-by-night player. And because he's manufacturing in-house, he's still able to offer a 15-20% discount to what those guys offer, while also maintaining this kind of margin. So he's very clear that this margin is something that is sort of untouchable for him, at least for now, because you have to do your own research on this. But this is the promoter's view and feedback on the margins. But generally, when there is a high margin business, I would say market will value it a little better because clearly there is some scarcity. There isn't a lot of competition. If he's able to maintain, and he's maintained this margin, it's not like this is an IPO year margin. Even last year, the margins were this good. Even the year before that, the margins were this good. So his margins are sustained. The company is coming at, I think, 16 times, which so for me, the only concern relatively in this business was that it was coming a little pricey. When you look at infra and infra proxies in India, they generally don't trade at a very high multiple. And that is the one slight risk, I would say, it's coming at a marginally high multiple. I really like the promoter. I think whatever interactions we have had with the promoter, both for the interview and on the one-to-one basis that we have had, he's comes across as he knows every single thing about this business. He's very, very passionate about this business. He's very clear that he can make this a very large business in the next few years. Probably in FY27, once his 3x capacity goes live, which will go live in October, he's pretty confident that he will kind of be fully utilized or nearly fully utilized to that in H2. And he can do like 90-95 crore. Again, these numbers are approximate, but just to get a sense that, he can do maybe again 70-80% kind of growth this year, at least from what he wants to achieve. So, and if he maintains a margin, it's not bad. It's not very expensive when you look at it on a FY27 basis. I think the main question here is whether you want to make a play that is an infra proxy play. Generally, infra is not a very high P multiple, but this is a manufacturing proxy in infra. It is not just a services company in infra. So it should get a higher multiple than your typical EPCs in the infra space. And so I think it is not unreasonable given the growth, given the quality of the promoter, given that it is a one-of-one kind of business. I think this will do well in a 1 to 2 year time frame. I think it will be a very steady compounder kind of business. If he hits his numbers, company is very cheap on FY27 basis. I am, personally, I am actually planning to apply for this. I think I don't see any GMP. I don't see any sales subscription also so far. But I do intend to apply whatever is within my risk-taking capacity. And I feel this can give a small gain also. The anchor book was also very solid. So there's a chance that this thing can give a gain. So if you guys want to take a risk, do it well within your risk-taking capacity. The markets are decent. The LM is also fairly decent. It has not really done a very bad listing so far. They've all been positive only, or flat or positive. So with all that said, I will probably take a risk, but only within my own capacity. I think you guys can also evaluate in that sense. But the company, the promoter, the anchor book, all of that is, very, very good. just that infra proxy and what multiple he'll get is the only thing that is kind of holding me back from saying this is a slam dunk apply. Otherwise, everything else is positive.
Thanks, Rohit. Very similar view. I really like the company. I think one company, like there are a few comments as well with saying that J Kumar, Arcade, SRM, all of them get 8 or 9 multiple.
Those are infra EPOs.
Those are infra EPOs. This is a
manufacturer.
manufacturer.
Probably have a slightly higher.
Yeah.
MSafe would be
I'll come to that. I think MSafe is one that, immediately came to my head also when we were evaluating this. And that was again the thing that kind of held me back also because MSafe does not get a very high multiple. MSafe is still the product, I think, is a little different. Scaffolding is far easier to manufacture compared to the engineering these guys do for the formwork that they make, because about 20% of what they do is customized formwork. So it is formwork that is for very specific shapes. It could be for I think I was mentioning, right, like a bridge underpass, overpass. It could be for a tunnel. It could be for very specific structures. And that is engineering capability that these guys have. That is not something you will see in scaffolding. Scaffolding is a much simpler business to execute. But one more thing, sorry, because this just reminded me. One other commonality or similarity with something like an MSafe is even this guy is about 20-25%. I don't remember the number, but minority of his revenue is from rental. His rental business is also actually a very lucrative business. I think he gets his returns his capital within a year, and this has like a 5-year life just on the bare product as is, and the core like formwork, the steel and all, you can use it for 20 years. So you can get a great ROI on just renting. And I think that renting model for him, you need a lot of capex if you have to set up a full-fledged renting model. So that's why for him renting is like 20-25% only. Otherwise you have to invest a lot in the inventory. But that's a good mix, if he has 75% his sales and 25% is rental, and he's able to generate the cash flow to keep the rental inventory, then his rental yields are amazing. So I think as a whole, the business is very unique, very interesting, definitely one of one, no other player. Plus there is a manufacturing element, there's an engineering element. So I think it deserves to be valued better than a MSafe and definitely better than an EPC company. But what that number is very hard to tell, which is why it's not like a slam dunk. I think just you can take a small risk, and especially if you think you can hold it, for his capex that will go live in H2, and if he delivers those numbers, it is definitely very cheap.
Yeah, plus the promoter seemed very confident of the numbers, right?
Yes.
So that
The promoter is very good. At least you guys should again make up your minds with whatever public information or public interviews are available. But in our interactions, I was mightily impressed by the promoter.
Got it. So that is with respect to Teamtech Formworks. Again, the good part is it doesn't have a GMP, so hopefully should be a easier sort of allotment. I'll probably apply to this one. That is what my view is. But yeah, you take your own view. Feel free to disregard whatever we are saying. With that, moving forward and talking about the second company. The second company we'll be covering is Vegorama, Punjabi, Angithi. If you're based out of Delhi, NCR, this name would definitely ring a bell. But setting it up, it's primarily engaged in food and beverage industry, operating a chain of restaurants and home delivery under the Punjabi Angithi brand. It's mainly known for affordable North Indian cuisine plus Chinese. In terms of the IPO, setting up the IPO, it's a 38 crore IPO, out of which there is a small OFS, 8 crore OFS, and then the remaining 31 crore is fresh issue. Then in terms of the market cap, it's coming at a market cap of 128 crores. अगर financials की बात करूं तो in FY25 they did 8 crores. So FY25 के basis पे they are coming at 16 times. FY26 के basis पे, because they've already done like 9 in 9 months. Sachin would talk about when he explains the company, the multiples, etc. In terms of the LM is Corporate Makers Capital. So with that, over to you, Sachin, to talk about Vegorama, Punjabi, Angithi.
Am I audible? Already.
Yeah.
So Punjabi Angithi, Vegorama Punjabi Angithi. So they were founded back way in 2013 and 14. When Mr. Deepak, who is currently leading the business, so earlier he was doing some business of battery inverter and distributor in and around Delhi NCR and Noida region, and then some idea struck him that we have to get in all veg restaurants in and around Delhi and NCR, because those were not present at that time in that region. And this idea struck him that we would make our own hotel chain, or you can say cloud kitchen or takeaway chain, and then we would set it up and scale it up. So from there it started in 2014, and in the current stage it has reached to around 23 cloud kitchens, and takeaway is also blended in that also, and they have around 2 fine dine outlets as well. Now what they are saying that we are offering all sorts of items. There are momos, there are Chinese, tandoori hai, thalis bhi hai, etc. And around 220 plus items are available on their menu. And primarily their revenues are coming in from e-commerce. So they hold around 90% share of the revenues is coming from e-commerce. Swiggy and Zomato are the leading ones. Zomato is offering a much more higher wallet share to these guys. Now, the company is also saying that in and around Delhi and NCR, where we have a good presence, they are saying that we claim around 5 to 6% of market share. So maybe people who have been in, who are in that region, they can surely say that the food is good, and the market share is also good, and the presence of Punjabi Angithi is also good in that region. Now, what this Zomato tie-up brings and relationship brings to them is that they get some good compensation and good incentives on the commission part as well from Zomato, and they also get some dedicated store level managers for their all of their takeaway kitchens and cloud kitchens, etc. So that is one benefit for them working with Zomato, and this is likely continuing for some years now, because Zomato is also gaining more popularity, more orders are coming in from customers, and Punjabi Angithi is also getting in more business from these customers as well. Now, what they are saying is that more than 60 to 65% are their repeat customers, and they are getting around 3 to 3.5 lakhs of monthly orders, and all are verified because all are mostly e-commerce only. So that is their biggest mode, that they are saying that these orders are our biggest mode, and they are also saying that in around 15 to 16 minutes we are able to prepare the fresh food, dispatch it, and most probably get it delivered between 20 to 30 minutes to the end customer. Now coming to their financials, so this was all about the business that they are mostly they are located in Delhi NCR region only. Now coming to financials, from 16 to 17 CR in FY23, they have now reached to 100 CR in FY25 with a PAT of around 8%, and margins, EBITDA margins have slowly grown up as well, around 10 to 11% they are quoting for FY25, and now in 9 months of FY26 as well. So if we just annualize those figures, it should be around 130, 140 in the current year, and the profit after tax should come around 12 to 13 CR. So it's around 10 to 11 times FY26. So those numbers will come in after the IPO is open and the company is listed. So that looks good on the number side. Now coming on the IPO usage, apart from that 8 CR OFS, there is one issue of around 29 CR. From that, around 12 CR is being used to make up 2 new fine dine kitchens, which would come live around FY28, second half of FY28. They are also setting up one centralized kitchen in and around Bahadugar region, around 4.5 CR they are using for that. And they are also setting up some new cloud kitchens, 49 lakhs per kitchen. So around 10 new cloud kitchens they are setting up in the same region of Delhi and NCR region also. They are also saying that we are getting more inquiries from Zomato, etc., to expand more out of Delhi and NCR region. So maybe they are exploring Pune as one other location to get into. So let's see how they perform out of Delhi NCR, because they haven't been visible apart from Delhi NCR for now. So how they will scale up in the new region and what sort of metrics go in that way, they will have to check up on that. Now some things that I found odd in this IPO, the fine dine that they are trying to set up, fine dine hasn't worked for them so far. So from 2014 to current date, they have already only been able to scale up this cloud kitchen and takeaway vertical only, and now they are slowly trying to get in via IPO money to fine dine, and that is also around 1.5 to 2 years down the line. So how they will now, they are getting the confidence to set up to fine dine in and around this Delhi NCR region when they haven't got the basic experience, or they haven't got what you can say the luxury to work in well for this fine dine. So that remains to be seen. That is a risk that these guys are carrying. If it works, it works well. If it doesn't, then it doesn't work. Because there are many other restaurants, or you can say countless number of these cloud kitchens are also there. Takeaway kitchens are also there. Food is one thing which this Angithi can control. So if they are able to control this food, and people are loving that food, so that actually benefits them. But it eventually will come down to whether people are only loving Punjabi Angithi, or there are ton of options available in and around Delhi NCR region only. Also, they are saying that the land of this fine dine restaurant that they are setting up, that is owned by the promoters only. So there is no legal lease agreement is signed up, and they are just committed that company can use it. There's nothing written so far. So that should be ideally be materialized before IPO, but they are saying that we would likely materialize and get it formal after the IPO. So let's see if that comes in, because that asset, or you can say that lease agreement is not with the company for now. So if that is one risk, outside risk that I see in this business. Also, all of their existing these cloud kitchens and take kitchens, so they are leased by the promoters from this to Vegorama Punjabi Angithi. And if you see the rental, I just checked the rental from similar sites like 99 acres, etc., in and around that Noida region. So rental which these promoters are taking for all of these spaces which they have leased to Punjabi Angithi, so they are at the upper end. But the promoters are saying that since these properties are owned by us, these rentals are likely not to exceed further from this point on, and they will likely remain in the same region. So let's see if these rentals stay in the same region, then it's good on the margins as well. But that is one risk, and they say that we want to remain asset light, so we have not taken all of these assets or this land etc. on our balance sheet. Now one also risk was there that this one IT investigation for ERP and Tally software, which is pending for now. So that investigation is also going on. They were summoned up for 4 assessment years, FY21 to FY25. So that investigation is still going on. So if it comes in negative, some image or something might happen to the business. Promoters are guaranteeing that nothing will happen, but let's see. It's a evolving story. So these were the risks. Also, their trademark is also opposed by some other nearby hotels. Punjab Grill and some other potential hotels have what you can say, they have opposed these trademarks of Punjabi Angithi. So that is also not registered for now. So these were on the risk side. So personally, I feel that on the valuations, if FY26 numbers comes in, it looks good. But if you see that the market is not very good to these issues, the food side issues, especially in the SME space. Many of the companies have come in and they haven't done very well on this food vertical or food side, apart from some given names like HOAC Foods, etc. Not very related business, but outside, if you compare these in the SME space itself, they haven't done very good. Lead manager has a pathetic track record. In 2025, almost 4 to 5 issues they brought in, and all are trading around 30-40% below their IPO price. One of them might be above the IPO price, but rest all are trading below the IPO price. Anchor List came in, so that had good names, but if you take in all other issues and pointers, etc., that quality gets reduced. So that is one's personal judgment that comes in when you're going to apply. So currently for me, I will likely skip this one.
Got it. Thanks, Sachin. एक दो चीजें हैं. So I spoke with the promoter, very in tuned with business, understands the business, has grown up with Swiggy, Zomato. So while Swiggy and Zomato were scaling up, this guy was also scaling up with them. So that relationship is something which is difficult for other people to build along with him, because 2014-15 से जब स्विगी जोमेटो बढ़ रहे थे तो उन्हीं के साथ ये भी और अपने स्टोर्स वगैरह बढ़ा रहा था. So that I feel is a good thing. Second thing with respect to that IT rate, like he had mentioned कि वो पेट पूजा करके कोई सॉफ्टवेयर है,
Right.
जिसकी रेट पड़ी थी, तो इसका उस पे इशू नहीं होना चाहिए, क्योंकि इसका तो मोस्टली डिलीवरी है, राइट? सो डिलीवरी में तो आईटी जीएसटी शुड बी वेरी क्लीन, बिकॉज डिलीवरी में तो वो रिकॉर्ड हो ही रहा है, राइट? सो आई फील दैट इज नॉट अ रिस्क. I still somehow like the business at IPO price. It's coming in cheap, but there are risks. There are risks with respect to unknowns. Like he's not doing known things, he's doing unknown things. I said delivery has worked very well for him. He's trying to build something on
Fine
the
line.
home dine
Yeah.
thing, fine dine thing. So that's a risk on the business. But at least on these numbers, I somehow feel that the downside is capped. But yeah, that is my individual view. But yeah, the LM reputation is a slight worry in the company.
Yeah, if that hits given the SME segment how it has performed, so we can get it below the IPO price as well. I'm not saying that it will eventually happen, but let's see. I saw that the
Yeah, let's
GMP
see.
has been on the downward trend as well. Anyways, GMP doesn't matter, but
No, I
let's
think
see.
that. Yeah, yeah, I think that's just randomness of the market.
Am I audible? So
Yeah.
I was actually looking to add few things. So it was said on the geographical expansion that it is looking to expand in Pune and currently just into Delhi NCR. So Pune is actually slight, far away from their timelines, and they're looking to expand into Punjab in next 1 or 2 quarters. They have specifically highlighted that. And also, they're also working currently in Dehradun also. Okay? They have got operations there. They will have a cloud kitchen opening there, and also in the fine dining part. So currently they just have two no restaurants, out of which one is a casual dining and one is a fine dining restaurant. And fine dining is about a 80-100 seater, and it has been actually quite doing well. Matlab, about 4-5% top line comes in from there. So 4-5 crore ka top line aata hai, which is a very decent top line for a 80-100 sitting fine dining restaurant. So it has got some small sort of a prior experience, but yes, agreed ki, it is actually looking to make a very large, you know, parts, like about, different segments of fine dining restaurants in a single place. ये एक चीज है. And also look at from a different viewer कि actually it is the first company from that cloud kitchen space as a whole which is getting listed, and actually it's quite a large company having 5.5% market share, and Delhi NCR that includes veg plus non-veg, and this is a pure 100% veg guy since inception. 5-5.5% मार्केट शेयर रखना पूरे दिल्ली एनसीआर का बहुत बड़ी चीज है. मतलब ये आदमी डेली का 17-18 हजार ऑर्डर करता है, विच इज लाइक क्वाइट इनसेन इन टर्म्स ऑफ वॉल्यूम्स. If you just look at players into this, if you just look at pure foods, pathetic P&L, they are doing about 800-900 crore top line FY26, and their IPO is expected to come at about 7-8 thousand crore valuation. And even if I consider 27, they are at about 7-ish times price to sales, 7 times. This guy is coming at 0.9 times sales FY26 and about 0.6 times FY27 and about 10.7 का P on FY26, because TTM भी करो तो भी 12.8 का number आता है about. So, like, I feel, the company has left like huge scope on the table, at least for the short term perspective. And also, if you just look at the peers who are into main board and about, they get anywhere between 5 to 8 times price to sales on us that year TTM basis or 1 year forward. I feel it is getting priced at pretty good levels. And also, Anchor was quite interesting. We never see him, Tatvam, and also Abacus into such sort of small issues. So, like, I quite liked, and I would be surely looking to grab it if it is getting listed at maybe 10 or 20% premium.
Got it. Yeah, it's an interesting company. We'll see. But yeah, I still like 12 to 15,000 orders करता है ये, which is different to like fine dine and building restaurants. But we also did the interview with the promoter where he actually explained how fine dining sits in. Fine dining is more of like a proxy to the cloud kitchen, where once you see enough number of times the brand, you tend to order more. Plus, this is more of a 400-500 seater which is building, which will have kitty parties, which will have place for bars, which will have a rooftop. So it's an interesting concept. Don't know whether it will work or not, but at least at IPO price, I don't feel there's much to lose. The only worry is that it kind of clashes with Teamtech and Qline. With the other thing, you get to apply to both Teamtech and then rotate it into Qline. So if one has money for only one. Like at least if I would probably be doing Teamtech plus Q-Line rather than Vegorama, but I also find the company decent at IPO price. With that, maybe we'll move forward and talk about the third company very quickly. The third company we'll be covering is Q-Line Biotech. Setting up the company, Q-Line Biotech is engaged in the business of developing, manufacturing, and marketing of reagents and consumables in the diagnostic space, and also sells equipments for different healthcare needs. Setting up the IPO, it's a large IPO. It's a 215 crore IPO, all of which is a fresh issue. It's the biggest SME IPO ever. It's coming at a market cap of 800 crores. Yeah, you heard it right. In terms of the फाइनेंशियल्स FY25 की बात करूं तो 322 करोड़ का टॉप लाइन है, 28 करोड़ का पैट है. We'll get into this, but yeah, that's what high level it stands at. In terms of the LM is Haim Securities. So I'll kind of talk about this company. Just want to highlight that I haven't written much about this. I'll also probably try and post a thread with respect to the company, because I had visited their operations in Lucknow on last Saturday and I had really enjoyed my time there. So I have a few pictures from there which I'll kind of post for everyone's understanding. But yeah, just want to highlight and probably explain my read. So what the company does is it's in the IVD space, in vitro diagnostic space, जो कि अपन पैथ लैब्स वगैरह पे टेस्ट कराते हैं. अपना ब्लड टेस्ट हो गया, रैपिड टेस्ट कराते हैं जो अपन आजकल वो NT-PCR वगैरह जो कराते हैं. सो उसमें जो इक्विपमेंट लगते हैं, जो इक्विपमेंट पे वो टेस्ट होते हैं. सो जैसे आपको ब्लड टेस्ट में अपन ब्लड टेस्ट कराते हैं, उसमें 50-70 वाइटल्स वो देता है अपने को कि आपका LDL कोलेस्ट्रॉल इतना है, HDL कोलेस्ट्रॉल इतना है. ऑल ऑफ दोस कम थ्रू अ मशीन, एंड उस मशीन में रिएजेंट जाता है विच देन interacts with your blood and calculates the value, which is then compared against the sample, and that's how you get the report. So this is the space in which this company is in. इसमें भी ये मेजरली दो सेगमेंट्स में, क्लिनिकल केमिस्ट्री एंड हिमेटोलॉजी में, जहां पे इसको क्लोज टू 10% मार्केट शेयर है ऑफ इंडिया इन टर्म्स ऑफ रिएजेंट्स. बट दैट्स ऑल्सो बिकॉज दे आर वेरी बिग इन यूपी एंड यूपी हैज द मोस्ट नंबर ऑफ पीपल. तो एक बार ग्रुप का बैकग्राउंड दे देता हूं. सो द ग्रुप प्रमोटर इज सौरभ गर्ग, मिस्टर सौरभ गर्ग, हु स्टार्टेड द कंपनी. ही इज ऑल्सो द प्रमोटर ऑफ POCT ग्रुप. तो थोड़ा सा कोरिलेशन समझते हैं. सो ही स्टार्टेड POCT समटाइम इन 1990s. POCT बेसिकली क्या करता है कि पूरा सर्विसिंग करता है, जैसे मतलब लैब की, यानी कि गवर्नमेंट से पूरा लैब ले लेगा और फिर खुद ही चलाएगा. मतलब उसमें AC भी खुद ही लगाएगा, मशीन भी खुद ही लगाएगा, रिएजेंट भी खुद ही लगाएगा, and then reagent भी खुद ही लगाएगा, and then use करेगा. So that is POCT. It's a very big company. POCT, same promoter, partnership company. उसका top line 650 crores का है. That is not the company which is getting listed. That is a separate 650 crore top, 100 crore bottom company. So when this promoter was doing this, he realized in 2014, I think, that he can backward integrate. अभी जहां पे वो POCT में ग्रुप से जो भी लैब्स चला रहा था गवर्नमेंट हॉस्पिटल्स के, कि वहां पे क्योंकि हम इतना मटेरियल खरीदते हैं, मशीन खरीदते हैं, तो वो भी मैं खुद ही क्यों ना बेचने लग जाऊं. दैट्स हाउ Q-Line came into picture. Q-Line is the company which sells these manufacturing machines as well as these reagents. So, and then he also has one more separate company called Hidelco, through which he sells ventilators, etc. That's also a big company. That's also 100 crore top, 10 crore bottom line company. So he's a range of companies. Then he has companies in IT, healthcare needs, etc. So a range of, so it's a big group. One of the companies is Q-Line, which is getting listed. Q-Line is a 320 crore FY25 top line company, जिसमें ये मेजरली दो चीजें बेचती है, दो चीजें करती है, ऐसा आप समझ सकते हो. पहली चीज है अपना जो मशीन है जिसपे टेस्ट होती है वो, और दूसरी चीज है उसका रिएजेंट. थिंक ऑफ रिएजेंट लाइक द फ्यूल विच रन्स दैट मशीन. सो जो मशीन्स हैं, सो अब मशीन्स भी दे स्टार्टेड बाय ट्रेडिंग, प्योर प्ले डिस्ट्रीब्यूटर ऑफ वेरियस मशीन्स विच दे यूज्ड टू बाय फ्रॉम इंपोर्ट एंड देन सेल इन इंडिया. सो उनमें एक मशीन है स्पेक्ट्रा की, Spectra Pro M. That's a machine which they used to import from Netherlands at 12,000 euros. तो उसके बाद उनसे उसका पेटेंट लेके टेक्नोलॉजी ट्रांसफर करके ये खुद से बनाने लग गए. So over a period of time, they have learned the facility to manufacture it by themselves. So the facility right now manufactures close to 1,000 uh, Spectra Pro M machines every year, and their cost has came down drastically because labor यहाँ सस्ता है, plus they have really indigenized all the material की जहाँ पे पहले लेथ वगैरह से मशीनिंग करते थे. They tend to do it with different CNC, etc. So they have kind of done the machining well, because of which the cost has came down to around 6,000, 7,000 euros, which they are able to sell it to different distributors. But ये जो machines है to different hospitals, ये जो machines है ये वो फिर वो hospitals वगैरह में देते हैं. But अब hospital जो है वो ये नहीं बोलेगा कि बस मुझे machine दे दो, वो क्या बोलेगा कि भाई तुम आके मेरी lab चलाओ, which POCT does, right? So they sell to POCT, and then POCT puts it in a hospitals and then runs. So 60 to 65% of business is RPT, related party transaction, which is a slight red flag when you think about it, but it is explained well because this is a big group. Then they also sell reagents. Machines का business जैसे मैंने बताया 340 crore का top line है, 340 CR. 114 is through sale of machines. In these machines, 114, 57, 58 is through the Spectra Pro machine, which they have manufactured. So basically 50% of all machine sales is actual manufacturing, and then 50% is for trading. Like uske liye bhi they are making machines, 3-part machines, 5-part machines, cell counter machines, etc., which they are expected to launch over the next few quarters at various stages. But right now 50% of business is actually manufacturing. And then reagent की बात करें so around 175 crore businesses through reagent. This is out of the 320 crores. इसमें भी 60-65% is manufactured in their own facility. Rest is trading, which is also increasing with time. They have basically already done the capex. तो उनने अभी लखनऊ में नई facility setup की है. They were very kind enough to show it to us. And according to the management, that facility is enough to do 1,000 crores of top line from the current 320, and they don't need to do any more capex. One more thing which will kick in probably very soon is export of these machines which they are making. So they have become so good at it that the Netherlands partner Spectra is now saying that because you are able to make it for so cheap, why don't you export it to us at a certain price? That would only be machines, that would not be the reagent part of it. So basically what they do is, I'll come back to it. I'll take a step back because I've forgotten to tell earlier. But ये machines usually very low EBITDA margin business है. Like think of it like water purifier जैसे अपने घर पे लगाते हैं. Water purifier companies don't make money. They tend to make money from the AMC contracts. Or like you will think of a elevator or a lift product. Lift usually is sold cheap, but then उसका जो AMC होता रहता है उसमें पैसा बनता है. So similarly, यहाँ पे भी machines go for cheap, but reagents over the life of the machine tend to give 8 times the revenue of the machine. So, and that is a 60 to 65% EBITDA business. So crazy EBITDA business. And उसमें भी ये रहता है कि machines या तो open ended रहती हैं या closed ended रहती हैं. Closed ended वो होती हैं कि जिस company की machine है उसी का reagent तुम्हें use करना है. So it tends to work well with respect to that part where reagent is what leads to the most EBITDA. And अभी तक क्या है पिछले 1-2 साल में आप देखोगे तो in fact this year also you will expect somewhere around similar top line. That's because they were doing a lot of machines and seeding was happening. So once that seeding has happened, अब machines हैं, those machines would now essentially lead to a lot of reagent being used. So your top line should ideally go up because of that. In terms of the IPO proceeds, तो 115 crore का जैसा मैंने IPO बताया था. So working capital is like 100 CR and then debt is like 90 CR. That's the rough split. So you are getting like they are paying off the debt which they have taken in order to do this huge capex which they have already done. Then what else? In terms of the other things that you have to look for is, in terms of the financials. So FY24 they had done a top line of 203 crores. And FY25 they have done 313. इन FY25 बॉटम आप देखोगे तो उसमें 28 करोड़ का ही बॉटम है, बट उसमें ना एक उनने रीएडजस्टमेंट किया है. So they got out of some partnership from POCT, because of which they had to take in 17 crore hit on the bottom line as one-time expense. So ideally it is like 45 CR if you think of it. On top of that, you would think like FY26 के 9 months के number उनने दिए 232 crores and bottom is somewhere around 38 crores. So annualized comes somewhere around 50 CR PAT. But then they're also repaying the debt, right, of 90-100 CR. So that should lead to another 10 CR of goodness, which market will start factoring in. क्योंकि वो तो interest payment नहीं जाएगा, right? So you're looking at somewhere around 60 bottom for FY26 just by this adjusted PAT, if I can call so, considering कि debt का interest नहीं आएगा. So you're looking at the companies coming around PAT पे 16 times FY26 and 13 times this adjusted PAT. And then the company is claiming that they'll grow 30 to 35 times. So it's a very good company to bet on that way if you consider that they are a manufacturing proxy. If you consider it as a distributor, then probably the valuations are stretchy or already factor in all the goodness. So that's how I consider it as a manufacturer per se. In terms of peers, they have mentioned that there are no peers. But if you look, you can probably compare it to like a 3B Black Bio. 3B Black Bio is a Bhopal-based company which does some of these reagents, etc., for highly precise tests like cancer markers, etc. Much smaller business. But I feel that's, if you look at it, high level that trades at like 20 times, but most of their revenue, like 30% comes from interest income. So अगर आप operating revenue ही देखो या operating PAT ही देखो, PE calculate करने के लिए is trading like 40 times. So that's a comparable. But if you just go by DRHP, the company said they don't have a comparable as such. In terms of the growth will come from CDMO जो ये instruments बेचेंगे in US, in Europe, etc. Then their reagents, etc., which they will develop. They have already built a facility for reagents as well, and they'll also do exports, etc. In terms of like, if I just talk about the risks that one needs to be careful about, first is the related party transaction. 60% is to related party. Second, it's a working capital heavy business because working capital gets stuck, because end of the day, it's going to government. Like they said that 60% business is to government because POCT is doing all government, but then they want to bring down the business to 20 to 30%. So which is good, but yeah, that's one risk in the business. Then revenue concentration, like most of the business is coming from UP, so that's another issue. And then there were a few IT rates, etc., which had happened. So can read more about that as well. But yeah, I would just say that to conclude with, I really like the promoter quality. Like promoter himself has built a huge group, but then for Q-Line, he just didn't do it himself. He just kept a very well qualified team. Mr. Ajay is the CEO of the company of Q-Line. He has worked with Merck Healthcare, Merck Diagnostics, and mentioned how a lot of things they have taken from Merck and have implemented whatever he had learned in his professional career. So he mentioned how this is the MNC in all way, shape, and form. So that just gives confidence. Very well run company. Like one more risk which I should definitely highlight is the huge float. It's a 215 crore IPO. 60 crore is anchor book. 150 crore is the float. So there will be a lot of selling which will come on day one. So because of which there might be some issue. But yeah, in terms of the anchor book was very, very good. You saw Abacus Mutual Fund coming in, probably their first investment in SME. Then Kalenian was there with Vikas Khemani putting in some money. Then Mukul Agrawal Sanchi was there. So overall, a very good anchor book. I'm kind of positive about the business, but considering the big size, if it gives like a 30-40% run on day one, after that it would take time is how I would think. But yeah, that is my read with respect to Q-Line Biotech. I'll also post about it. So you can probably follow me if you haven't. But yeah, that is with respect to Q-Line. Anything else that you guys want to add on Q-Line, which I might have forgotten?
I'll add some points. So apart from Selectra Pro, they are also making some new instruments. Microlab 300, Medonic M20, Selectra Pro के और versions भी है, Selectra Pro M, Selectra Pro XL, and one Q Count 5. So all of these new instruments drive more reagents, and more reagents means more CDMO revenues, both on the instruments and this reagent part. प्लस जो ये रैपिड किट्स है जो प्रेगनेंसी वगैरह में यूज होते हैं, तो दे आर लुकिंग टू स्केल अप दैट वर्टिकल एज वेल. उसमें आई थिंक वर्किंग कैपिटल साइकिल इज वेरी लेस, सो इफ दैट गेट स्केल्ड अप, सो थोड़ा सा वहां से बेनिफिट मिलना चाहिए इनको. दैट्स ऑल.
Got it. Yeah. They will probably continue to do well. This can be probably one of those long-term compounder bets which you can think of, which will tend to do well. But considering it's a SME, it will have a lot of ups and downs and volatility. I did ask the question why a SME listing and not a main board listing. Answer was quick turnaround because they were looking to retire some of the debt. So SME is faster. But 215 crores is no joke for a SME segment. So let's see how it evolves, and if it tends to list at 30-40%, the move after that would be definitely very interesting to see. That is with respect to my read of Q-Line. With that, we will kind of just close the space. Just want to highlight we did 3 companies, Teamtech, Vegorama, and Q-Line. Interview for Teamtech and Vegorama is up on the YouTube channel. It's in the comments as well. So you can listen to the promoters and take a view. For Q-Line, I'll post a thread so that you can go through it and make your own view. But yeah, I would probably be applying to all 3 in some capacity. We'll see how that varies basis the subscription, etc. With that, thank you so much everyone for joining. Have a good day ahead.
Thank you, everyone.
Thank you, everyone.
Thanks everybody.